Stock of the day, thought we'd continue the supermarket theme. Both Woolies and Coles came up on the call last week. Metcash today riding high on the watch list. The company reporting a 4.6% boost to full year underlying profit, with the company saying sales have continued to grow in the first 7 weeks of FY24. Revenue also higher, up over 6% in the period, with the board declaring a final dividend of 11 cents a share, taking the full year payout to 23.5 cents. Company though, bit cautious. While demand continues to be solid in all pillars, the impact of higher interest rates and cost of living has started to impact consumer confidence and the behaviour of some shoppers and customers, according to the company today. Bit of a spike in Metcash share price today after taking a bit of a hammering in June, as the general stock market has, and 6 weeks ago that sharp fall down. Daniel, what did you think of the Metcash announcement and also the stock price at these levels?
Yeah, I think the announcement, it seems like it kind of really kind of culled some of the market concerns. I think hardware was probably a little bit of a point of concern for certain analysts, and it was a little bit weaker than expected, but certainly the strength in its underlying business and retail and liquor kind of solved those issues. So that's why the stock did open up pretty positively today, I think around 5 or 6%. And I think it does offer some decent value. Although I will say, you commonly hear that Metcash is a good buying opportunity because it trades at a discount to, say, Woolies. Well, my comment would be that, you typically see these discounts be warranted, and it's very rare that the valuation gap kind of narrows and closes. So, I think it's a fine business to hold, and I wouldn't certainly be selling it on today's news. It seems like, inflation's still quite sticky in the grocery segment. So I'd be happy holding the stock, but, I don't think there's probably enough there to call it a buy at the moment.
Is it your preferred supermarket stock?
No, I think certainly ours has been Woolworths,
Right.
and we've held that for quite some time. And I think today's update probably actually puts a bit of a case to get more interested in Endeavour, because it did seem like liquor sales for them were a little bit higher than expected as well.
Right. Oh, that's interesting. David, what do you think of Metcash?
Yeah, it was quite a good result, or better than what the market was expecting. That's why the share price is up fairly well. Their hardware was a positive part of it. Their earnings in the hardware division was up 16.8%. And as Daniel said, the liquor was a positive as well. Good business, good result. We've got a hold recommendation on Metcash, but we do have it in our value portfolio. So it's got a dividend yield of 6.4%. They announced the 11 cent dividend today, so they're maintaining that. We think it's a reasonable business, and it is actually our preferred of the supermarket
it is your
retailers.
preferred?
Yeah.
Oh, that's interesting.
So we've got Lightons on both Coles and Woolworths. I think that they're probably a little bit overpriced at present times. But similar to Daniel, we do also like Endeavour and think that it is a good business in that liquor space as well, and they're trading fairly low, so don't mind them either.
We had both Woolies and Coles last week through separate panels. Basically, all holds on Coles and Woolies, but everyone split on who was the better, Coles or Woolies. So it's a bit of a toss-up.
Yeah. And look, all of them, whether it's Coles, Woolies or Metcash, they're all getting increased competition from Aldi. We're also seeing Costco and the like. It was interesting to see in the result today that Metcash mentioned that they are seeing people buying more tinned and frozen food, less fresh food, and also their private label is doing quite well. So people are
so they're seeing a change in habits.
Definitely,
Right,
yeah.
okay. All right.